Bitcoin is already fixing the world. Like you as an individual can decide to upgrade your personal money or your personal wealth and your personal savings to Bitcoin. And if you do this and you have a long time horizon, your life has been getting better. You're a lot more wealthy. Things are getting cheaper, including things that people complain a lot about, whether that's food or housing or whatever else. And there's a lot of reason to believe that the next 5 years will be probably pretty similar in the sense that Bitcoin is not going to change in the sense that, it's not going to become more abundant. Like the monetary policy is immutable and no one can change it. And it's going to, every 4 years, it's going to get more scarce with the halving. And over time, like just like the last 16 years, more and more people are recognizing that Bitcoin is just good money and they're buying it and they're holding it and they're using it as money instead of, creating this massive diversified portfolio of everything, which is highly inefficient. Everything is going to continue getting cheaper for those that decide to do it. And again, I think that Bitcoin is just this natural Schelling point that everyone is going to converge on and everyone is converging on. It's just, maybe less than 1% of the world has been able to recognize that so far. But every year, more and more people are recognizing that. And that's exactly why Bitcoin is, increasing in value and becoming a preferred form of money and preferred form of savings for the entire world.
All right, we are live, friends. Thank you so much for coming by for another episode of the podcast. I really appreciate you being here. Today we have Joe Burnett, who is similarly to, we were just talking about before this, sort of a similar vibe to Joe Consorti. For people who listen to that episode, actually did really well. A lot of people like to just hear about these bullish cases for how Bitcoin is really changing the geopolitics of things, how it's changing the more bigger thinking than the individual level. And I really like that. And there's lots of fun stuff we're going to get into today. So Joe, thanks for joining me, dude.
Absolutely, Ben. Thanks for having me.
So I love to get into the people side a lot here. I like to talk about the person's story. So could you give me a little insight on your background before you got into Bitcoin and how you found Bitcoin?
Yeah, absolutely. I can start this my story, I guess, with maybe a different framing from what I normally do. Back in 2012-ish, I was in middle school or early high school, probably early high school at this point, maybe 2011. And I was kind of very interested in computers, very interested in, kind of finance and money in general. And I had taught myself to create Android apps. And one of the Android apps that I created was called Commodity Prices, because I noticed a lot of people were searching for commodity prices on the Android App Store or Google Play Store, and there was not really a good app for that. So for some reason, I decided that I wanted to build that. Kind of taught myself the basics of programming and stuff. And this is kind of like my unfortunate Bitcoin story. Is I guess I had built this app using the Yahoo Finance API. And at the time, I guess Bitcoin was probably like $10 per coin. It didn't exist within the API. So I like to think that I was like very close to buying, a bunch of $10 Bitcoins. Obviously that didn't happen. Quite unfortunate. But that's kind of like a little bit about my early background, like getting close to discovering Bitcoin, but not quite discovering it. I didn't discover Bitcoin until, from at least what I remember, until 2017. I was basically searching. I was a Reddit user, and I was looking at either our cryptocurrency or our Bitcoin. And I had grown up, I'm in college by this point. I had grown up like understanding that to save for the future, you invest in IBM or Coca-Cola, and they're relatively not volatile. They go up a little bit every year. They pay a 3% dividend. It's like a safe way to save for the future. And then I just remember seeing Bitcoin in 2017, not really understanding what it is whatsoever, but seeing the price of it slowly tick up in a fairly exponential way by the end of 2017. And I was just very, fascinated by what it is, and it caught my attention. So I was like, oh, all right, I'll buy a little to try to understand what this is. And then it really ramped up at the end of 2017, peaked like at, $18,000, $20,000 per coin. And then all throughout the 2018 bear market, I dove into like the entire crypto space at the time. And I was like, okay, like this was obviously a major bubble in 2017, but there's got to be something valuable here. And I read things like the Nakamoto Institute. I messaged Pierre Richard endlessly, and thankfully he kept replying to me. And eventually, throughout that bear market, I found out and concluded that the true innovation of this entire space is Bitcoin. It's sound money with an immutable monetary policy that can't be changed, and it's perfectly scarce. And so the price throughout 2018 just kept going down and down, and eventually it went down to like $3,000 per coin. And I was so convinced, throughout that entire year, or by the end of the year, I was like, the price keeps going down, but this seems very logical, and it seems like something is here. And I think this something is Bitcoin. So after that year, I was hooked ever since. Fast forward, I continued to write and talk about Bitcoin as much as I could. Went to graduate school, studied analytics in graduate school. After graduate school, I could have worked in the Bitcoin space, but I wanted to say that I worked at a real company with a real job for at least a little bit. So I did technology consulting at EY. And then at the peak of the 2021 bull market, I quit that job and joined Blockware Solutions, which is a Bitcoin mining company. And then for the last year and a half or so, I've been working at Unchained, which is, a financial services company that helps secure about $10 billion worth of Bitcoin.
Awesome, dude. I wouldn't have guessed that your intro was from the more technical app development side. I would have thought it was like the more economic side. Did you have any like education going into economics, or did that just sort of come later as you started learning about Bitcoin? Was that sort of what got you interested in that?
Yeah, I think like when I started college, I was like trying to decide whether I should like study computer science or study finance. Like I had always been interested in like economics and money and gold. Like I'd built an app on commodity prices. So like I kind of like was very close to like going down like the Austrian rabbit hole. And I probably like did to some extent, like as a young kid. But I studied information systems, and then computer science was my minor, and then analytics was my graduate degree. And analytics was in the business school. So I took like, advanced financial modeling classes and things like that. So I kind of have the background of going both, computer science and then also like finance and economics. And so I think like those, ideas, and then having like a libertarian conservative background just made me very primed to quickly want to believe something like Bitcoin is possible, and then find out maybe it is possible.
Awesome. Yeah, I love it. And one of the other things I wanted to highlight from your story, because I think that part of the reason I love always starting with people's story, no matter what the subject of the podcast is going to be, is that there's so many pieces we can pull out from that people can learn from and not have to go through the same mistakes we did. And a great example is how for your Bitcoin knowledge journey, you went to the Nakamoto Institute. And I just talked with Bitstein recently. He's the other guy behind that. And that was an extremely good call going to that for education. I went to YouTubers with Pretty Thumbnail talking about altcoins and crypto. So I spent a long time wasting my life on a bunch of scams. I didn't know were scams at the time. So for people listening, go to the Nakamoto Institute like Joe here did. It's a much better place to go. And it'll put you on the right path, because all of those cryptos go to zero against Bitcoin, and they are not worth your time. While we're on that, before we go to the next part, basically, I do love to bring this back as many times as I can, because there are still so many people out there that are in that sort of crypto sphere. They think that these different tokens will have value and the blockchain is going to change everything. What is your overview to those people, and what are the reasons you give them for why they should be focusing on Bitcoin only?
Yeah, it's a really good question. I think it obviously stumps so many people. One way that I
No
like to
matter how smart or rich they are, like we still see billionaires falling for this stuff. It's crazy.
Absolutely. Yeah, absolutely. One way that I like to approach this idea is I think economic systems inevitably converge towards one best form of money. And if you think like what exactly is money, I think that's what money solves. Money solves the problem of barter in an economic system. There's a reason that, I'm not growing bananas and exchanging those bananas directly for everything that I want. Like our economic system converges on one best tool with specific monetary properties, and we use that tool for savings and trade. And I think that Bitcoin objectively has the best monetary properties compared to all other forms of crypto. It also has no pre-mine, right? Like all Bitcoin were distributed through proof of work, meaning everyone paid a market price for those Bitcoins, whether they paid it in like physical dollars or whatever fiat currency they're using, or they mined it at the market price, because the difficulty adjustment, makes it to where you mine it at the current market price. And so I think Bitcoin is by far the best monetary tool that we've ever discovered. It has the most immutable monetary policy. It also has the least amount of future uncertainty when it comes to that monetary policy, when it comes to being censorship resistant, when it comes to not having its core rules able to be changed. And so once you kind of figure out like, okay, all these other crypto things like ETH, Ripple, Dogecoin, whatever it is, they have either far more uncertainty, far smaller network effects. They may have been pre-mined. They may not have. They obviously have a less immutable monetary policy, meaning their monetary policy either has changed or will change, and their rules constantly get changed. Like ETH, went from proof of work to proof of stake, and had the DAO hack, which means the rules changed early on within the ETH protocol, and that's why there's ETH Classic. So that's my view. Economic systems converge on one best money with the best monetary properties. And Bitcoin is the best money. And then as far as like crypto, like outside of money, because maybe there is a use case outside of money, people will say things like real world tokenized assets or stable coins. And like stable coins are somewhat interesting, but it's like it's not a really good investment. We all know that we don't want to hold dollars or for a very long time. So that's not really that interesting. And then meme coins is kind of become like the new thing, or at least this cycle that seems to be a thing, which is kind of funny because it's like the market is admitting that the entire crypto industry is like hot air, and there's nothing really credible that's being built. So people turn it into a funny casino, and they say, okay, well, if this whole thing's a joke, let's actually make a joke and be real with the joke, and maybe people will actually buy the joke. And that's exactly what's happened. So it's like you have Bitcoin, which is the best money, which no one can compete with because economic systems converge on one best money, and then the rest of it is just a big casino.
So you're telling me I shouldn't put my life savings into Trump coin, basically.
I would avoid that if possible.
But the utility, Joe, of these other, like Ethereum, like, okay, sure. So Bitcoin's the best money. Like, I get that. But all this utility that we have, they can do all sorts of different things. They're interoperable between each other. Like the utility.
Yeah, that seems to be like the common, criticism. And I still think that's a really bad argument. It's like, do you want to hold Chuck E. Cheese tokens because there's a lot of utility? You can go and play games with them. Or do you want to hold airline miles forever because there's a lot of utility with them? You can fly. There's a lot of examples of that. It's like those could be useful and they could have some sort of value potentially, even though there's a lot of many of the use cases in crypto like seem to be gambling and just random betting, and there actually might not actually be any value to begin with. But if there is an argument, say there is value for whatever reason, it doesn't necessarily even mean you should hold the token, right? Like you don't hold Chuck E. Cheese tokens. You don't want to hoard airline miles. You don't want to hoard credit card points. It's just not a good long-term investment. And I don't think that that's going to ever be the case with any sort of token other than Bitcoin. I think Bitcoin is the best money.
Yeah, I'm pretty convinced that the whole utility argument is just what stupid people say to sound smart on the internet, and cause that's what I did. One of my biggest shitcoins that I held on to was Basic Attention Token, BAT. It's part of the Brave browser, and I went down that whole path and thinking, oh, like of course it's so, look at all this utility, like it's using these ads on the internet. It makes so much sense. But now that I've done actual research, read the Bitcoin Standard, gone through the Bitcoin side of things, I know that like a good browser would just use Bitcoin for that. It's a better form of money for people. The market would just demand to use actual good money for these services. They don't require their own token.
Yeah, exactly. And it also kind of goes back to the problem that money solves to begin with. It solves the problem of barter. It's like if you wanted a token for every single good and service and tool that you're going to use, then we don't need money to begin with. You would just hold all these different tokens and goods and services, and you would exchange directly with each other. But that's the entire purpose of money. It's to converge on one common tool for savings and trade. So it's like we're kind of going back in circles to the problem of barter, and people are confusing that, thinking that they're investing in some sort of very valuable future technology that doesn't even really make any sense.
Yeah, and people like, and this is something that I also got tripped up on, was this idea that, oh, there will be a variety of these different tokens for different things, and that'll be a good thing. Somehow that would be a preferable future to just having one, which is kind of crazy now thinking about. Of course, it's easier if there's a single currency that everyone uses. It brings everyone together. It removes all the friction between all these different jurisdictions around the world, and that is the ultimate solution. It's not like, oh, this is so sad if only one of them wins and all these other fail. Like, it's good that way. It creates a better world that way that's more seamless between transactions.
Yeah, absolutely. I mean, thinking about like the unit of account function of money, it's like if you had, if you went to the store and you saw 1,000 different prices of different goods, all in these different forms of tokens or money or bananas or whatnot, it's like that would be so confusing, especially for, accounting of a company. It's like, did you make profit in 100 different units or 1,000 different units? No, it's like you want to focus on one tool, and that's what you're going to use to determine if you had a profit or loss. So yeah, I completely agree. It was a crazy phase, and it seems like we're potentially, coming back on focusing on Bitcoin, which I hope will be the case, and people won't get distracted. But there's also meme coins flying around, so people, eventually learn about Bitcoin, but it takes time.
Yeah, for sure. And I do feel that too, that the percentage of people that are going into that route of the crypto route versus the Bitcoin route, it seems to be getting smaller and smaller. I'm not exactly sure how to measure that, because there's certainly plenty of idiots out there. There's also a lot of bots being deployed by these exact scams who are like trying to make it look like there's a lot of attention around it, but there really isn't. And I go back and forth on if I ever think crypto is going to completely die, because it's just such a, I mean, casinos and gambling hasn't died, and that's
Yep.
exactly what this is. So there will always be a subset of people that will just want to gamble. The problem is that they've had these really fancy marketing pitches over the last several years that they are in the same category as Bitcoin. Even when you turn on CNBC and they're doing like crypto talk, and it has Bitcoin, Ethereum, and Monero and whatever, and they like include Bitcoin with all these other altcoins, and they really, in so many other of these big, TradFi platforms, consider all part of the same bucket, and that is why it's confusing and why Bitcoiners get angry on the internet. And I remember back when I was a crypto guy, just thinking like, oh, the Bitcoiners are so mean, and these maximalists are just so toxic for only caring about Bitcoin. But now I know, like, oh, they were right this whole time. It
Yeah.
really, Bitcoin is in a whole world of its own. Everything else is pure gambling, not a little bit of gambling, but complete gambling. Even the quote unquote blue chip cryptos of the ones that are just higher up the chain, it's all going to end up getting swallowed up by Bitcoin in the long term. And I know that something you talk about a lot is how Bitcoin isn't just going to swallow up all the crypto; it's going to swallow up literally everything. And this is a really wide ranging discussion. And one of the things that you talked about in your introduction as well was how most people look at these blue chip stocks like IBM that you mentioned as or a savings account. Like, that's their savings. When you go to a financial advisor, they say, "Oh, you don't want to hold your money in your actual currency. You need to invest it to protect that wealth, or you need to put it in a house." Real estate is another one I have on here, which you talk about a lot. And so I would love to hear. I mean, we just go straight into this. This is kind of your bread and butter. Is the the idea that all of these different things. We can start with stocks or real estate. Should these really be the way that people have to save their money instead of the actual money itself?
Yeah, it's a really good question, and it's something that I think I've thought about a good bit. Earlier in 2024, I published a report titled "Your Wealth is Melting" that kind of went through all of the different asset classes and kind of showed that over time, it's potentially logical to expect a lot of them to, continue decreasing when they're measured in Bitcoin. And therefore Bitcoin is savings technology, and a lot of these things are more investments that require risk if you're going to invest in them. And you can find the report on unchained.com/melting. But yeah, the general thesis of the report is right now humanity is storing a lot of wealth outside of Bitcoin, right? Like you see in Jesse Myers, his chart showing that total global wealth might be around $900 trillion. And one way to think about how this is all going to play out and how this has been playing out for the last 16 years is if humanity stores $20 trillion worth of wealth in gold, that's a massive bounty for entrepreneurs, the market, businesses, or whoever to go out into the world or into the universe and mine more gold. And we see the supply of gold grow at 1% to 2% per year because we're finding more creative new ways to go out and mine more gold and debase the supply of gold. And that's hundreds of billions of dollars of new gold being mined every year and being sold. And that creates a disincentive to try to hold wealth in gold, because if you're getting constantly sold on by natural sellers that are mining it at a profit, then potentially gold is not the best way to store wealth. I think you can actually, and this is kind of like the Jeff Booth technology deflation thesis, but applied to how humanity stores wealth today. Like his thesis, which is fantastic, and his book Price of Tomorrow is fantastic, is like technology and free markets and capitalism makes consumer goods more abundant, more cheaper, and more efficient to actually produce. Like you'll see, like a common example might be a hard drive, right? Like, 20, 30 years ago, you might be able to get like a 1 megabyte, which is tiny, hard drive for, $1,000 or something like that. And now you can go on Amazon for a couple $100 and buy like a 10 terabyte hard drive, which is like hard to fathom the actual size difference between those two devices. And that's obviously happening at a very rapid pace. But the same exact concept can be applied to how humanity stores wealth today. So I mentioned gold. Another one is real estate, right? Like if humanity stores $330 trillion worth of wealth in real estate, whether that's single family houses or apartment buildings or even land itself, humanity is going to actually go out into the world and produce more real estate, whether that's build more houses, build more apartment complexes, or even create more land. There's an artificial island off the coast of Dubai called Palm Jumeirah, which houses 20,000 or so residents that would have had to live elsewhere. Like they literally created land that houses tens of thousands of residents out of nothing, right? Like, and why did that happen? Is because people want beachfront property. People want land to live and they want houses to live, and that's exactly what it does. And so when humanity stores all of this wealth outside of Bitcoin or in real estate, that creates a massive market incentive to go out into the market and build more houses, build more apartment complexes, and create more land. And I think this is kind of like what Saylor talks about. He uses like a waterfall analogy where wealth is moving from assets with high potential energy to low potential energy, right? Like there's a pond that's way up in the air on the side of a mountain, and there's a waterfall, and like it's just a natural process for the water to fall down the waterfall into the lower potential energy state. And all of this like entropy and randomness and things that are going on makes that happen. And that's exactly what Bitcoin is. Bitcoin is the lowest potential energy state because we can't create more of it, no matter how much, energy, time, or resources are poured into mining more Bitcoin. We can only create 21 million Bitcoin. Whereas all of that other $900 trillion worth of wealth, we can create more of it. And so real estate and gold are examples. There are other examples like stocks, which I can go through if you want, but that's kind of like the general thesis of that report and kind of how I think about Bitcoin.
You're bringing me back to my college physics class with all this potential energy talk. It's been a while. I'm a little triggered. That's a good analogy, though. I really like it. I think it's solid. And this is where the engineering mind also comes in. We were talking earlier how you can come into Bitcoin from the economic side or the technical development side. And Michael Saylor is an engineer who found this, and this is why I have a bunch of engineering friends from the university I went to. I'm trying to get them into this because that sort of brain can really just figure out how these pieces fit together and actually gets us to a better world through creating a better money. And I think that's very fascinating. Have you done like engineering thoughts on this outside of just that waterfall analogy?
I mean, other than I'm not really an engineer by trade, so not really. But I think that Saylor's analogy of the waterfall and assets and wealth moving from high potential energy to low potential energy. I think that's like a huge, really important way to think about it. And it's what I kind of wrote in the report titled "Your Wealth is Melting," but I didn't frame it in that way. But it's like exactly kind of what I was thinking. So I really liked his analogy.
Yeah, different ways to think about the same idea, different or the same concept, which is awesome. And where does the money printer come into all this? Because I feel like right now we're sort of framing this as, this normal market that actually works well, and there's using that sort of scope. It's obvious that Bitcoin is better, but then comes in the money printer of the government and the central banks and the Federal Reserve and all these entities that can just throw money at everything that they want, depending on what their agenda is. How does that mix up this whole game and make it even more important that we have a sound form of money?
Yeah, I mean, the money printer itself and the idea that the supply of fiat money is growing annually at for the best case maybe the US dollar maybe like 7 to 10% per year. So I'm talking about the nominal units, not the consumer price inflation. uh it's obviously growing and compounding at a significant rate for a while, and ignoring Bitcoin, it creates a lot of distortions, right? Like, I think wealthy people intuitively know that they're not just going to hold 100% of their net worth in a checking account that pays 0% interest. They even intuitively know they shouldn't hold it in a savings account. Like, they know that they need to quote unquote invest their money in the S&P 500 and IBM and Coca-Cola and real estate, like you mentioned, but they don't necessarily know why. And it's funny, like Tad Smith, who's the former professor at NYU Stern, he had a good analogy here that I really liked. He was saying that, like, a lot of people are trying to create this massive diversified portfolio of all these different assets, whether it's real estate, equities, and US equities, foreign equities, and specific industries and other specific industries. And like, when you create this massive diversified portfolio, you're really just like matching the market, which is effectively kind of just matching the money printer. And it's like you're not really getting ahead, you're not really necessarily getting behind, you're just like investing in a bunch of different things. There's a bunch of middlemen in the way taking their fee, their cut, or management of large corporations are obviously taking their fee and their cut. And it's like, it would be a lot more efficient if you, one, had a really good investment idea and just concentrated on one thing. Like, that would be good probably for the world. But two, if you had a good savings technology that just matched the money printer itself and didn't get debased over time, and had no one person or no one entity or no one group that could change the monetary supply of this immutable monetary tool that has a perfectly fixed supply. So it's like, the money printer exists, and I think a lot of people intuitively know it exists, but they don't necessarily know the problems that it's directly causing, like unaffordable housing or large corporations that get bigger and bigger because we all save in the S&P 500. And they also definitely don't recognize that a potential solution to this is actually sound money, which is Bitcoin. And I think trying to connect those dots is difficult for a lot of people. But I think over the last 16 plus years, when Bitcoin's been growing at 100% compound annual growth rate, it's obvious that slowly more and more people are beginning to understand that the solution to this money printer is sound money, and Bitcoin is the best form of money.
I love that explanation. I couldn't have said it better myself. And one of the pieces there that I want to really highlight, because this is something that we like to harp on a lot in Bitcoin, is how this system, where it's just become so normalized that in order for you to not get destroyed by inflation, you need to put your money somewhere other than the money,
Yep.
the like invested in stocks and put in a mutual fund. So some very smart financial advisor can just put it right where you could just do it yourself and charge a fee on top of it. And basically, this system just forces people to have to think about finance more. It forces them to think about they have to be a part-time investor outside of their normal job. So, and there's some lucky people like me, and it sounds like you as well, who, this whole idea of investing like intrigued me. It sounds like, oh, I can make more money on this. I can go like buy this stock and see if it goes up, and I can follow the company. It's kind of a fun game, and I enjoyed it. So that's why I got in 2017, I believe, is when I started. But most people aren't into that, and they shouldn't have to be.
Yeah.
Like the doctors, farmers, engineers, teachers, artists. These people should be able to focus on what they're actually good at and what they want to do, and not have to be an investor just to be able to stay alive and afford food and rent and feeding their kids, right?
Yep. Yeah, and it's, markets work super well, and free markets work super well because we all specialize in specific things. If we were all, it's similar to the problem of barter. If we were all trying to do everything at the same time, like provide for ourselves and be 100% self-sufficient, really cool goal. And maybe with like technology, we'll be able to do something like that. But we wouldn't progress very far as a society. The reason we got far as a society is because someone's like, okay, you go fish, you go gather, and then I'll build some sort of new technology like a fishing pole that might make fishing more productive, or I'll build computers, or I'll build AI. And it's like, once you start getting all of these different, tools put together, everyone becomes better off because we're all specializing in building these unique siloed things, and we all trade with each other freely, which enables us to all benefit from other people discovering like really cool technology that helps us use. And again, it's like very related to the problem of barter, where it's like we converge on one tool. We don't try to save every single possible tool and try to trade every tool with each other. We just pick one tool, and it makes things a lot simpler.
Yeah, and this is why the human race is so beautiful, is because we have a lot of diversity within how our brains work, and what kind of things we like to do. Like, there's so many stories of people who there will be like a 3-person family. One kid goes off and becomes an engineer, one becomes a piano player, one person does something totally different. And we have uh, these very interesting, just the way that we're built is we go in all sorts of different directions, and we just learn how to do different things that make us happy and fulfill us. And by having that stable variable, the money itself, it makes it so we can specialize. And being able to specialize in what you as a human being are good at is so powerful. It's so hard to overemphasize that, because you talked about back in the barter system, you have people that are really good at farming, people that are really good blacksmiths, good people that are good at building a house. And so all these people, you know, they need to have a certain unit they can use to trade with each other in order to make everything work properly. And that's why when gold first came about, which was, I would say, the first really like good form of money we had, for thousands of years, it created massive abundance and prosperity for people. And a big part of it was its scarcity and the fact that you can't print it, and that it follows these rules really well. And yes, things later on eventually started, breaking down, which is why we are on monopoly money now. Could you maybe give a little bit of an overview of just your take on where gold fits into this story? We talked about a bit about barter and where that isn't so great. Then gold comes into the picture. Walk us through gold as we'll call it like the best we've ever had, and then we'll go into like how Bitcoin compares specifically to gold after that.
Yeah. Yeah, so like I mentioned, like when everyone is starting to begin to specialize in producing specific goods and services, we inevitably, or humanity has historically converged on a common tool for trade and savings, whether this has been ray stones, glass beads, seashells, silver, bronze, or gold itself, which I agree was like historically for thousands of years, one of the best forms of money that the world kind of converged on without talking to each other, right? Like we all just kind of like, oh yeah, gold's good money. People may not even understand why it was good money, but they just knew that gold was money. In my opinion, and from historical evidence, I would say the reason that gold was good money was because it had specific monetary properties, right? Like it was one of the most scarce monetary tools ever discovered. And you can look at something like the stock to flow ratio, not
Pop
to be
quiz.
confused. Yeah.
Do you remember all the different traits? I have a hard time remembering them all every time. There's like 7, right?
Yeah, the ones that I like to use are scarce, portable, durable, divisible, and fungible. I
Well
think that's
done.
5.
I'm so bad at remembering all this.
There's others that like some people will add like acceptability, or there's a few others that people will think, but I think that those 5 are kind of like the key ones in my mind. Um, so yeah, I think people inevitably converged on gold because it had those specific monetary properties, and it was kind of revealed to people via NGU technology, like number go up technology. It's like if you held your wealth in glass beads or seashells, well, another civilization might have come over and found you, recognized that you were using this inferior form of money, and then they could exploit you by bringing their glass beads that they can easily manufacture and buying up all of your assets and all of your resources. And then you're like, what happened? Well, we were using an inferior form of money, and if you actually used the best form of money at the time, you would have been able to protect yourself, as the conquering civilization may not have been able to debase you and buy all of your stuff so easily. So yeah, I think humanity converged on gold because of those specific monetary properties, but there are problems with those monetary properties. Obviously, gold is not perfect. One, it's not perfectly scarce. Two, it's not portable over the internet. So once we actually became like a more global, interconnected world, especially with the internet, and now we're trading with, from China to the United States to Africa to South America to all these different places, it's very difficult to transport gold, over the ocean without a lot of risk, right? Like there's sunken ships. There's also like, it's very expensive to do that. Like no one actually wants to do that. And so fiat, from my perspective, kind of formed because gold was not very portable in a very global world where we're all very interconnected and we're all specializing in producing our own resources and services and products that are, geographically, constrained. We started to create these like IOU pieces of paper or tokens, and we would say like, okay, well, here's a piece of paper that's redeemable for gold, and it's kind of, it's a way to kind of still transact somewhat in gold, but you have to trust a trusted third party. And that worked for a little bit, and that's kind of what fiat money is, and that's kind of like why we have this system we have today, and that's why like fractional reserve banking has formed. It's kind of like an inevitable consequence of an inferior form of money. But that system of IOUs continued to get larger and larger, and then eventually, governments like the United States broke the peg with gold as the IOUs got so big and people were owing each other these IOUs that there would have been a deflationary spiral if you'd kept the dollar and gold peg. So they broke the peg, and now the dollar got disconnected from the price of gold, and we're on this fiat money standard where the supply of money actually grows at 7 to 10% per year. And it's kind of a big experiment that we've been going through for the last 55 years, I guess, and we don't necessarily know how it will end. But it will most likely end in a way that the money continues to get debased forever. And then inevitably society will converge back towards a form of money that no one can print. And I think the best form of money is obviously Bitcoin.
Yeah, and there's all sorts of ways to try to introduce this concept to people that all they've ever known is dollars or pesos or euros or whatever their government's law mandated currency is that they're supposed to use. And inflation, I find, is a big one. You mentioned Jeff Booth earlier, has some good analogies here. He is like the inflation guy. He talks about inflation all the time. And this is the one I try to explain to people is how, because everyone can feel that things are getting more expensive. And this is a big question that I think is so important for people to think about is, we're advancing as a species. It seems like we're getting more efficient at communicating, more efficient at building stuff. We have all these fancy new machines and the AI, things that make it easier to create these things. So why is it getting more expensive and more prohibitive? That doesn't make sense. And I know people are starting to ask that question more often. So how would you answer this question and introduce Bitcoin as a solution to that for them?
Yeah. One analogy that I like that can kind of like highlight how crazy the compounding is when it comes to deflation, both deflation and inflation. And this is an analogy from Jeff Booth's book. And I don't remember the exact number, but the point of this holds is if you have a regular piece of paper and you fold it 37 times, how wide will that paper be after you've folded it only 37 times? And if you ask a normal person that, they'll be like, oh, maybe like this big or like this big. And then you're like, no, actually it'll reach the moon. And you're like, wait, what? That doesn't even make sense. But it does make sense because you realize the piece of paper is X amount thick. And when you do X times X times X, or X to the 37th power, or whatever the exact number is, it's maybe 35 or 40 or whatever it is, that gets really big really fast. And that's exactly what's happening with both inflation and deflation. Inflation in the sense that the supply of dollars is compounding every year at 7 to 10% in an exponential rate. So if you zoom out long enough, like 7 to 10% literally looks like an exponential curve. And then same with deflation in the sense of how is technology making common goods and services more deflationary and more abundant? Well, it's like the 1 megabyte hard drive that you could buy for $1,000. Now you can buy a 10 terabyte hard drive for a couple $100. Like that is a massive exponential gain in how much memory you can store per unit of real economic cost. And so it's like these two things are going in the opposite direction, and it's creating like a lot of weird dislocations within like the entire global economy. It's right, like everyone's hoarding real estate, but we are starting to be able to create more real estate more efficiently. Things like technology, like TVs and computer hard drives, like those are getting really abundant really fast at a faster rate than houses. So those prices are dropping like crazy. But then, basic consumer goods like eggs or other things like that, those are kind of like a little bit of a middle ground going up at like 3% per year or whatever the CPI metric is. And so it's a very complicated thing. But obviously, I think the solution is converging on a money that actually will naturally reveal the natural deflation that's occurring. And I think that's what Bitcoin does. If you start pricing real estate or other assets or other goods and services in Bitcoin on a long enough time horizon, they're all getting cheaper. They're all getting more abundant. And I think as more people see that and they start measuring their assets in their portfolio and their common goods and services that they're purchasing in Bitcoin terms, they'll see that they should just kind of work hard, do their normal job, provide for society, and then save Bitcoin for the future. And over time, because of free markets, capitalism, and technology deflation, everything actually gets cheaper over time rather than more expensive, which is a lot of people that are stuck in the fiat system.
Yeah, and there will always be a few things out there in the market that are goods that require work to make and can't be sort of pigeonholed into the factorization and industrialization. And one example that a lot of Bitcoiners like to use, myself included, is meat, this food that we eat. And man, I just went shopping back in, I was living in Seattle for a week, kind of chilling by my old college campus back there just for memories. And I went to the store to buy some steak and ground beef. And I just I need to start like holding on to something as I'm looking at these prices. I'm about to faint. A pair of New York steaks is like $49. And the ground beef, which I literally remember within just the last couple of years was like $5 a pound, it's like over $10 now. And like, it's just massively going up because these are things that require work to create. And so I think that is sort of you talked about these weird disconnects and these just, I mean, the only word really is weird, like things that just don't make sense. And you see stuff like the Beyond Meat slot burger and the soy blocks, all these things that are just, very much industrial. They are able to stay cheap because they can like change the factory settings on things. So maybe you could explain a little bit how, like, why are there some things that are getting more expensive, some things that are not, and clarify that for people that may be confused.
Yeah, it's a really good point. It's like I mentioned, the supply of dollars is growing at 7 to 10% per year. Yet we'll have like the CPI metric, which is actually growing at like 2 to 3% per year. And part of the dislocation there between the 10% and the 2%, or the 7% and the 3%, is one is technology deflation. Like I do think technology is making things a lot more abundant and a lot more accessible. But another one is like they need to keep the CPI metric low, so people don't panic and like get out of the dollar and buy gold or Bitcoin. And so part of what they do is adjust what exactly is within the metric. Whether that's, okay, you used to eat ribeyes for dinner, now you're going to be eating this ground beef, or now you're going to be eating this manufactured sludge that is not even real meat, maybe because they can produce it faster and cheaper. And so you kind of have these like natural market mechanisms that companies will react with, because they're forced to try to make things cheaper and cheaper to keep their price competitive while the money's getting debased, because naturally, their input costs are going up, which means that they either need to increase their cost to the consumer or change their product slightly to maybe make the cost not go up just as much, but maybe create a worse product that the consumer will still buy because maybe they don't notice it's a little bit smaller or a little bit more unhealthy or whatever the reason is. And so a lot of like the basic consumer goods, that normal everyday people buy, like those are getting squeezed and becoming like more nasty and maybe not as good and healthy as they once were. Whereas like the healthy things that require a lot of time, effort, and work, and maybe like AI and technology hasn't been able to automate much of it quite yet. If it ever will be able to automate, 100% of it, those are actually like growing up in value at the 7 to 10% that the money supply is growing. So it's very complicated, but that's kind of at least how I like to think about it.
Yeah, and one of the points you just brought up there that I think is important for people, this is, within that exact same vein, is how inflation is forcing these goods and services producers to make these decisions of, are we going to, they have to do something because their input costs are rising from the money printing. So they have to either raise their prices or shrink the size of the product, which we see like all these, the people posting videos of, oh, like I used to get this box of things and now it's smaller now. And there's less of it in the box. There's like a tiny bit at the bottom of the box when it used to be full. And or they lower the quality of the product by diluting it and
Yeah.
putting more, watering down of the product. So there's all these different things that they do, and I think people just incorrectly they get mad at those producers. Oh, they're making this product worse. They're making it more expensive. They're shrinking the packages. But I would say no. They're forced into that by a much higher problem, which is the banks printing money, the Federal Reserve printing money. And so, could you elaborate on that a little bit? How people have their enemy wrong here.
Yeah, definitely. Another kind of related topic that I also just had a problem with CPI, and you know, this at least this is how I think about it. Is like if the money supply doubles overnight and your salary remains the same, well, you actually as a consumer, you might have to adjust what exactly you buy because things get more expensive. And so, like when you're measuring CPI, like they'll change the CPI based on what consumers are actually buying. And again, like if the money supply is going up and consumers have to buy less quality goods, then that's going to make the CPI look lower than it actually is because
Sorry to
they're,
interrupt here, but just for people
yeah,
who don't know, CPI is consumer price inflation. This is like the government's official measurement number that they put out there to try to measure inflation. And it's like you said, it's complete garbage. They just massage it all over the place to push a story, basically.
yep, yeah, exactly. And they could, you can argue that like they're trying to be accurate, but like part of the problem is like it changes over time because if the price of steak 2x's overnight, and now as an individual, I'm like, okay, I can't afford this. My salary didn't 2x overnight. Now I got to buy this Beyond Meat, whatever, for half the price or the same price because that price went up too. Now the CPI will be like, oh well, the consumer just adjusted their preferences because and actually the cost of food is actually flat. But it's like that's not really what happened. Like I adjusted my preference because I couldn't afford the food that I was eating because you create a bunch of money and my salary for whatever reason didn't 2x. So yeah, I think like a lot of people have like a misguided understanding of CPI, and I think it's almost like an impossible metric to even like quantify to begin with because like Sailor has pointed out, like everyone's preferences are different. If you're like a billionaire, you might be buying a lot of yachts and beachfront real estate. If you have a negative net worth because you went to college or whatever and you borrowed a lot of student loans, and like your CPI might be like Netflix and popcorn or something along those lines. So yeah, I think like a lot of people, to go back to kind of like your original question, a lot of people also have like a misguided understanding of like where the real problem is. Like they'll see corporations like, oh my gosh, like this corporation just jacked up their prices, like they're so greedy, it's very unfair. But in reality, it's like, well, their input costs went up and they didn't really change anything with their factory. If anything, maybe they got a little bit more efficient with technology, or they should be over time, but they're still increasing their prices and maybe your salary didn't go up. So it's so you're mad about that and you're thinking that they're being greedy and for whatever reason. But in reality, it's like actually the supply of money is growing and the new money that's being created may not be being handed directly to you or being used to purchase the goods and services that you're selling. Maybe it's going to defense, or maybe it's going to handouts, or maybe it's going to real estate developers that are building, massive apartments or whatnot. And so like you're not getting the new money first, and therefore the people that get the new money first get to spend it into the economy first before prices adjust higher. And so it's really like if you get access to the new money first, whether that's in the form of debt or the form of government handouts or government spending, then you're going to benefit. And if you're very far away from that, then you're not going to benefit. You're actually probably going to be harmed. And that's called the cantillionaire effect or the Cantillon effect. I've heard it pronounced both ways, but that's kind of the general idea.
Yeah, for sure. And I can just hear people thinking right now, because this is probably what I would have been thinking several years ago. How, you're talking about, who's the really bad guy here, and most people think it's the CEOs. They want their bigger bonuses, but when you look at the actual amount that the CEOs are making, how big these bonuses are, it's like a minuscule grain of sand on this beach that is, the money printer, like how much it actually pumps out. So how would you compare the numbers we're looking at here, just to give people a little bit of perspective on like what scale we're talking about between, these CEO bonuses or what the corporation's profits are versus the money printer from the Federal Reserve?
Yeah, it's a good question. I don't know like the specifics on like how a CEO salary or bonus compares to whatever else, but I do definitely think that like massive government spending where the government is spending like multi-trillion-dollar deficits, people definitely cannot fully comprehend what like $1 trillion means relative to $1 million. I don't think I really have a good analogy off the top of my head to compare it, but it's like obviously magnitudes difference between $1 million and $1 trillion. And it's like the government is literally creating new money out of thin air, creating T-bills, which in my opinion are effectively the same thing as new money, and they're using it to buy whatever they want. And it's a lot of money that's just being created out of nothing. And yeah, like obviously our small salaries are nothing in compared to the amount of wealth, or not wealth, but the amount of money that the government is creating out of thin air and spending into the economy.
Yep, I love it. I mean, I don't know the numbers either. They're intentionally ridiculously hard to follow because they're so big.
Yeah.
There's no way to quantify these amounts that we just see flashing up on a TV of these. Oh, we're spending this much money on this, sending this much money to this other country, this much money over here, and they are just constantly pushing it out. And they also have control over the media, so they are able to massage these messages into making people not care about those, but get mad at the companies and the CEOs and the grocery stores, which
Yep.
is not the correct place. It's very sinister. It's very deep, just how it's all meant to really keep the population lulled to sleep in understanding where things are really wrong and going and, protesting in the street about Walmart, raising prices or whatever it may be. It's a problem. And that's
Yeah.
why, Bitcoin's coming in to save this. And I would say, well, so we know we need sound money to fix this problem. That's what we sort of set this up with. And we talked about how gold did this really well for a long time because it had all those different traits you talked about. Now Bitcoin comes onto the scene at a time in history where all of this is just an overdrive. We're seeing, infinite money printers going crazy everywhere, prices going crazy. People are not doing well right now. Human beings are in a rough spot, even though, we're told, oh, this is the best it's ever been. Those dark ages in history were so, barbaric. Like this is the best it's ever been. Everyone's happy. It's not really true. When you look at people on the street, people are struggling really badly. People aren't having kids anymore. They can't even afford it. Things are just collapsing. And Bitcoin comes into this at an extremely interesting time in our history. What does Bitcoin do, and how does it compare with the goal that we talked about earlier? Why is it the perfect character to come into this battle right now and provide the solution to people?
Yeah. Another way to think about this also is like people say like, when is Bitcoin gonna like fix the world? And like, Bitcoin will never fully fix the world. Like we're humans, we're all imperfect. But I do think Bitcoin is going to make a lot of positive changes and help a lot of people. But I would also argue that like Bitcoin is already fixing the world. Like you as an individual can decide to upgrade your personal money or your personal wealth and your personal savings to Bitcoin. And if you do this and you have a long time horizon, your life has been getting better and things actually have been getting less expensive compared to if you were still living on the fiat world, right? Like, you know, in 2020, the price of Bitcoin almost the entire year was less than $16,000 or $20,000, roughly. Most of a lot of 2020, it was actually below $10,000. I think like in March 2020, it touched $3,000, and like over the last 2 weeks or so, the price of Bitcoin has changed like $19,000. It was at like 109, and then last night it hit like 91, and like that's a big difference. It's like a $18,000 difference. It's like that was literally the price of Bitcoin just like 5 years ago. so and the price of Bitcoin is actually less than that for the most of 2020. And so it's like if you had just been saving in Bitcoin for the last 5 years, your life has gotten a lot better. You're a lot more wealthy. Things are getting cheaper, including things that people complain a lot about, whether that's food or housing or whatever else. And there's a lot of reason to believe that the next 5 years will be probably pretty similar in the sense that Bitcoin is not going to change, in the sense that, it's not going to become more abundant. Like, the monetary policy is immutable, and no one can change it. And as long as more, and it's going to, every 4 years, it's going to get more scarce with the halving. And over time, like just like the last 16 years, more and more people are recognizing that Bitcoin is just good money, and they're buying it and they're holding it and they're using it as money, instead of, creating this massive diversified portfolio of everything, which is highly inefficient. Uh, I think more and more people are just going to continue doing that, and everything is going to continue getting cheaper for those that decide to do it. And again, I think that Bitcoin is just this natural shelling point that everyone is going to converge on, and everyone is converging on. It's just, maybe less than 1% of the world has been able to recognize that so far. But every year, more and more people are recognizing that. And that's exactly why Bitcoin is, increasing in value and becoming a preferred form of money and preferred form of savings for the entire world. So, like, I think, yeah, there's a ton of problems with the world, but you can start with yourself. And that just means, buying Bitcoin, holding Bitcoin, continuing to work and provide value for society, and being, doing something as simple as saving more money than you're earning, being conservative and not being a massive consumer, buying a bunch of things that you don't necessarily need, but, working hard, buying Bitcoin and saving it for the next 10 years. I think that's a great strategy for most people.
I love that you split up the micro scale and the macro scale, because it's important to always think, we are all individuals at the end of the day. So I love to just sort of blow things up to big picture, like save the world a lot. But, on the individual level, when I look at my own life, buying Bitcoin has just tremendously benefited me, not just financially, but mentally. Just the fact that you have something that can't be taken away from you, it can't be debased. It's a fixed like if you buy one sat, that's a fixed percentage of the overall Bitcoin supply forever. There will never be more printed to dilute you. And that is a really powerful thing that people realize as they start buying this stuff. It's like, wow, this, I feel more secure in my future now, and
Yeah,
that's a huge deal. And it,
100%.
it changes the way that people feel about the future. And, Bitcoiners are just having babies everywhere, and no mystery. They're like, people like feel more secure. They feel more optimistic. And when this starts happening at scale, that's when you see really beautiful things. And that's when you sort of blow up to the macro scale of how this is really siphoning power out of these dark forces we talked about, the banks and the governments and these other entities that want to control everyone, keep them enslaved through these tools like inflation and, controlling the media, gaslighting everybody, all these issues. Um, I would love to hear your take on how you really connect that for people. It's easy to explain the micro side, like I just did, but when you start thinking about the macro side, how Bitcoin is siphoning the power away from the banking institutions and the governments and these power hungry entities, how does it really do that? How do we see that transition of, central banking world into a Bitcoin world, and how the power dynamic shifts?
Yeah. I mean, yeah, I definitely think it starts with the individual, and the individual acting in his or her own self-interest. And I think that's exactly what happens when you decide to save Bitcoin. For example, if you don't save Bitcoin, what are you doing? Well, you're creating this crazy diversified portfolio, which holds a lot of T-bills or long-term US treasuries, which helps fund big government. You also might be holding the S&P 500 or a bunch of corporate bonds and some sort of like corporate bond ETF, which funds these large corporations that may not stand for exactly what you stand for. And like you're not supporting the small mom and pop businesses. You're supporting these massive large corporations that are probably a little inefficient. And so it's like, if you don't hold Bitcoin, you're funding all of these things that you don't necessarily support. Like, your entire net worth is actually funding all of these things that you don't necessarily support. And so it all starts with the individual. Like, if you go out there and you're like, actually, I'm going to reallocate my capital. I'm going to take capital away from big government. I'm going to take capital away from these large corporations that may not stand for exactly what I represent. and I'm going to buy Bitcoin with it. Well, that in a way, that's marginally defunding these large organizations and then funding all of the Bitcoiners, right? Like, which is the individuals out there. So as you buy more Bitcoin, just as you individually buy more Bitcoin, you marginally increase the price of Bitcoin for all of the other individual Bitcoin holders that are out there. And then all of those other individual Bitcoin holders that are out there have more future optionality to maybe consume more or start their own company or invest in whatever company that they actually believe in, rather than just being forced to chase yield and create this crazy diversified portfolio that's filled with the trusted entities that you think that the world says that you should hold your wealth with. And that may not be the best way to do it economically now that Bitcoin exists. And that's going to create a lot of massive change once each individual recognizes that, and we start taking capital away from large entities and funding and holding Bitcoin. Another way to think about it is like Elon's and Trump are like big on Doge, like the Department of Government Efficiency. You can argue that like Bitcoin itself is Doge, right? Like if as people
Times a
misallocate,
million. Like it's untouchable level. Like these government versions are never going to touch it, basically.
yeah, exactly. And it's like if as you reallocate your capital away from T-bills and long-term treasuries and corporate bonds and large corporations, you're taking your money and not funding them anymore, which means that they have to get more efficient. If they're not getting the capital, or they're not able to quickly borrow another $1 billion or $1 trillion, because that's where your wealth is, if it's not in Bitcoin for the most part, then you're gonna be doing a service to everyone by holding Bitcoin and creating this new Department of Government Efficiency by defunding the government. And then the government is going to have to get more efficient. It's not saying the government won't exist. Government will still exist, in my opinion, but they're going to have to be a lot more efficient, because it's going to be very clear when they're misallocating capital. And right now, the incentive is for everyone to hold their wealth in government bonds and S&P 500 companies, and that creates a lot of inefficiencies within those large entities.
Yeah, I love that. And I completely agree. Bitcoin is a forcing function for efficiency. So every single one of these actors within the system is being. We don't have to create any government office entity like Elon and Trump are doing and saying, oh, this is going to fix everything. This Bitcoin actually forces them to have to provide an actually valuable service, and it's going to naturally wipe out all the nonsense, because no more do they have the fiat money printer as a backstop. And one example I like to throw in here a lot, because I do a lot of traveling, is the airline industry, which is a great example of this, because every time there's any sort of uh, economic hardship out there, they just go crying to government daddy and say, oh, like we need a bailout, we need a bailout. And so they keep getting bailed out, and they keep getting worse and worse services now, because they know they don't actually have to provide great service. They will always have the government daddy to save them. So this is why everyone who travels like I do often, it's just getting worse and worse and more annoying. You're treated more like a criminal. They stole my freaking steel pan last time. I'm still salty about it. They said, "Oh, this could be used as a weapon." Just all this
Mm,
stupid stuff, getting delays and flights canceled. And I think that's a great example of this, where that all is because of fiat money. The money
yeah.
is broken, and that's why this is happening. And one of the things I wanted to bring this toward was, you talked about how the fiat wealth is going to naturally converge into this Bitcoin wealth. And one of the little flags that popped up in my brain is that I know what a lot of people are going to be thinking, because I talk to these people. I come from the Pacific Northwest, so I have a soft place in my heart for all the people coming from the left side of the political spectrum. When they hear this, they're thinking, oh, but poor people, they can't afford Bitcoin. Or are they just going to get screwed again by this? All the money just goes to Bitcoin, and then they get rich, but the poor people aren't able to buy any. What do you say to this as your reasoning for why that's not the right thinking?
Yeah, it's an interesting question. One, I definitely think it helps to be an early adopter of Bitcoin, right? So, like, just because that someone is early to Bitcoin and can benefit greatly from it doesn't mean that you shouldn't buy it. Like, it means you should still probably buy it, probably before everyone else figures out they should buy it. As far as like why it won't benefit poor people, I don't think that's even necessarily true. I think that like fiat money itself doesn't benefit poor people. Kind of like we said, like if you're able to borrow $1 billion because you're already incredibly wealthy and you buy real assets, well, like the act of borrowing money via the commercial banking system is actually increasing the supply of money. You buy this apartment building for $1 billion or a few apartment buildings for $1 billion. you jack up rents or whatever. Poor people get hurt by that. The supply of money in the entire system increases. Food prices start to go up because there's more money circulating. The guy that borrowed the $1 billion to buy the couple apartment buildings, he got massively wealthier because the value of his the dollar value of his apartment buildings increased. He could jack up rents a little bit more because the amount of dollars in the system increased as well. And then the poor people just get stuck with higher rents. They didn't get the money first. In fact, they got hurt by the money first being allocated to the billionaire, and then they're worse off, perpetually. And it's like Bitcoin is kind of the opposite. Like there's no way to easily borrow, a bunch of Bitcoin. And if you borrow a bunch of Bitcoin and you don't pay it back, well, whoever lends you the Bitcoin is going to be out of Bitcoin because there's no Bitcoin printer to bail out, negligent borrowers and negligent investors. And so I think like you've kind of already seen this in the Bitcoin space where it's like in the fiat world, it's if you're a billionaire and you have $1 billion, it's actually pretty easy to go from 1 billion to 2 billion. It just takes like 7 years or so. And having that diversified portfolio, and all of a sudden now you're at $2 billion. If you have 100,000 Bitcoin, it's very difficult to go from 100,000 Bitcoin to 200,000 Bitcoin. In fact, it's like exponentially difficult because the price of Bitcoin is getting more and more expensive. And so that's kind of like what you've seen with a lot of early Bitcoin adopters. It's like they reach a peak amount of Bitcoin and then it's kind of down only ever since. It's like the opposite of fiat money, where fiat money, people get wealthier and wealthier. The Bitcoin system, they might get wealthier and wealthier because the price of Bitcoin is going up, but the amount of Bitcoin that they have relative to everyone else actually decreases if they happen to be a net consumer. If they're a net investor and they're a really good investor, then it's possible that they can keep accumulating more Bitcoin, but that requires them to provide a ton of value to society, unlike the fiat system where, again, you can just kind of create this diversified portfolio of everything and still do really well.
Yeah, and the only terminology I might use differently than you there is like if they're a good investor, I would say they're a good saver. Like because Bitcoin is savings technology. Like for me, this is my ultimate savings account, and I completely agree with you there. I have hit a couple of goals I was really trying to get on Bitcoin, but it does get harder and harder because it's going up more and more in the fiat price, which again is a wobbly ruler, so it's hard to really measure that. But all that really matters at the end of the day is to get your Bitcoin price or your Bitcoin amount up as much as possible. Get as much Bitcoin as you can of that supply in any way you can, and this is why we see so many Bitcoiners. Selling all their chairs is sort of the joke that people make. Is like, oh, I just need more Bitcoin. I'm going to sell all my stuff. I'm going to, get more jobs so I can get more Bitcoin. I really do think that is a good mindset to be in. Is you really want this stuff, because if you're the dollars you're earning are not going to get you anywhere. That's not a savings account. That's government monopoly money that they can take away from you, and they are taking it away through debasement. So I love your framing there, and yeah, to bring it back, just this idea of the poor people, the lower class, how are they helped by this? I think that the best explanation is, as we've talked about on these other aspects, Bitcoin forces things onto this world. And one of the things it also forces is deflation, because we will be moving to this deflationary currency, which is completely different than the inflationary one that's printed to a bazillion. So could you maybe talk a little bit about what deflation is and what a deflationary world on the Bitcoin standard may look like?
Yeah, definitely. I mean, it's exactly what Jeff Booth talked about in his book, The Price of Tomorrow. And it's very similar to what I talked about in the report, Your Wealth is Melting. Deflation, you can look at it, both inflation and deflation, you can look at it two different ways. Like some economists will say like, it's the measure of prices within a system that are inflating or deflating. And then some other people will be like, well, it's the monetary supply itself, whether that's decreasing or increasing. For this deflation thing, I'll think about more of the prices of goods within the system rather than the monetary units itself, the nominal amount of monetary units. When the money supply is fixed, like Bitcoin, things are actually going to be deflationary. Kind of like we talked about. It's like, if humanity, or if the ability to produce strawberries becomes more efficient due to robotics, AI, self-driving cars, or other harvesting technologies that harvest strawberries automatically, and then eventually like put them into a truck that self-drives itself to the grocery store, or maybe even it just self-drives to your house directly and drops a bunch of strawberries off for you. It's like these new new technologies that exist that are going to make things more efficient and require less human labor and less human time are actually going to make things less expensive in real terms. And when everyone is trending towards using a money like Bitcoin, that's going to be reflected in the price of strawberries. And one day you might be paying 100,000 sats for strawberries. The next 5 years from now, you might be paying 10,000 sats for strawberries. And so that's kind of like the idea of deflation, is like these basic consumer goods are going to actually become more abundant and cheaper when you're measuring them in a good form of money.
I'm really glad you slipped AI in there, because this is something I was going to bring up. Everyone has an opinion on AI. Some are, super dark and, it's going to destroy the world. Some think, oh, it's going to be super efficient, it's going to save the world. The conclusion that I have personally come to by researching all of this stuff through the lens of understanding Bitcoin and basic economics is really that the fiat future of AI would be a dystopian hellscape, and the Bitcoin standard future of AI would be incredible and super full of prosperity and abundance. So could you maybe talk about that a little bit, how having the underlying money being sound would actually create a really awesome AI-enabled future, whereas if we continue on the path we're on now of the fiat printer system, that would actually create even more hardship and be a worse outcome?
Yeah, it's a very interesting way of thinking about it. It's like again, like the fiat system wants to maintain a small amount of quote unquote consumer price inflation. Um, they do this by increasing the money supply, and then there's some sort of technology gains, natural technology deflation type gains every year that occur, which enables them to actually like inflate a little bit more or create a little bit more money supply than they otherwise would have, because the price of these things, or the ability to create these basic consumer goods, actually got marginally more efficient. And you can kind of like imagine a future to where if there was a massive technology breakthrough and like everything got automated in a really rapid manner, the government would still try to maintain this consumer price inflation growth year after year, which effectively means they need to print a lot more money or distribute a lot more money just to maintain the same CPI inflation of 2 to 3% or whatever their target might be. And that creates a really weird scenario where the government can actually get bigger and bigger because capitalism, free markets, and technology is naturally trying to lower the prices of these basic consumer goods. And so it's like, if you drag that out on a long enough time horizon, the government just gets incredibly massive and very inefficient, and can probably track everything you do and blah, 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 and all that type of stuff. Whereas the other side of the argument is Bitcoin. Instead of the gains from this technology deflation accruing to the government and enabling the government to get bigger, or even incentivizing, I would argue, incentivizing the government to get bigger, in the Bitcoin world, the gains from this technology deflation actually accrues to the people that hold Bitcoin, the consumers that hold Bitcoin and that are actually going to go out and buy these basic consumer goods. And so if you take that to the logical conclusion, well, then the price of Bitcoin, which is what everyone can be saving and arguably should be saving, that's just going to make every individual more wealthy and more powerful, and not necessarily make the government itself more powerful. And so it's like, it is very interesting. Like, we're having this compounding effect again here, where it's like you want the compounding effect to be benefiting the individual people rather than this big collective inefficient government organization.
Yeah, it just basically changes where the prosperity goes,
Yeah.
and people should be asked, do we really want more prosperity in the 0.001% at the top that's been controlling us and making the world worse? Or do you want to be at a grassroots level where everyone who can, has connection to the internet, or even, there's solutions out there for using Bitcoin even without internet that people are creating, which is crazy. But anyone that can download an app on their phone can earn Bitcoin. And that is really crazy, because you can be part of the system. And the amount of Bitcoin you start with is not important. And this is one of the things I also try to tell people. You can buy, $5 of Bitcoin a week or a month even. And it's really hard to explain how that mental shift happens when you just have some skin in the game, how
Mm-hmm.
you just start to feel different just having this form of money that's actually not going down all the time. It actually goes up for once.
Yeah.
And it is volatile. And I'm sure maybe we could talk about this a little bit. People will say, oh, like I look at the price chart and it's all over the place, and it's this is risky, and I don't want to lose my money by having it in Bitcoin. So what do you say to those people who are turned off by the chart looking a little bit wonky?
Yeah, it's a great question. And I think this might be like the thing that gets a lot of people hung up on Bitcoin, because Bitcoin is highly volatile. Like, there's absolutely no denying that the price of Bitcoin itself is extremely volatile. What's kind of interesting though is like Bitcoin, the asset itself, is the opposite of volatile. It's like the least uncertain asset that humanity really even owns today. Like I mentioned, like the monetary supply schedule of Bitcoin is fixed. It's public. You can download the software itself, and you can like basically plot the monetary supply schedule as you would expect it to occur. And no one can change it. No individual, no group of people, no one can change it. It's also censorship resistant, right? Like, it's an asset that you can hold, and no one can stop you from sending it to someone else. You can send it to anyone else in the world, any address in the world. No one can stop you. So it's like, it's kind of weird. Like, okay, well, how is this thing so volatile when the asset itself is like literally has not changed? The core rules of it has not changed in 16 years. It doesn't even really necessarily make sense intuitively once you like kind of have grasped that Bitcoin is not changing. But then you realize, like, wait a second, well, Bitcoin's been growing at a 100% compound annual growth rate for the last 16 years. So it's growing really, really fast compared to everything else. And it's like, well, why is it growing so fast? Well, maybe people are like adopting it as a form of money. Maybe they're actually using it as savings technology because they've recognized it has specific monetary properties that make Bitcoin better money than all other forms of money. And so it's like, that's exactly what's happening. And when you realize that that's happening, Bitcoin starts to go into like crazy parabolic bull markets. Why? Because like a group of humans starts to figure out that this thing is the best money, maybe because of a market price signal that's occurring, like the number is going up really fast. And that leads other people to figure out like, oh, wait, maybe Bitcoin is good money. Maybe I should buy some. And then it starts to outpace its maybe current rate of adoption. And maybe instead of going up 100% per year, like it's kind of done over the last 16 years, maybe it goes up 500% per year for 1 year, or 1,000% 1 year. And then obviously, like when it goes up that high, well, maybe that's an unsustainable bull market that just occurred because there was a new wave of adoption. And then we get a bear market where it goes down 50, 80% or something like that. And that kind of washes out people that didn't really get it. They were just here for the quick number go up technology, but it's long-term number go up technology. That's what good money would be. And so it's like, if you are willing to stick it out for 4 years and ride out the volatility, and you expect the volatility to be occurring, because again, the volatility is only occurring because it's growing so fast from my perspective, then you realize like, wait a second, like I should just buy this Bitcoin thing and hold it for 4 or 5 years and ride it out. Like I can't time the market. Markets are incredibly complex. I have no idea what is necessarily going to happen over the next 12 to 24 months, but longer than that, maybe 4 or 5 years, I do recognize that economic systems are converging on one best money. And it seems very logical that Bitcoin is the best money. And I don't expect that to necessarily change over the next 5 to 10 years.
Yep. And I love the framing of volatility is vitality. I can't remember who came up with that. It was either Saylor or someone
Saylor,
in that realm, but that's a really good one. If it's super volatile and acting crazy, that's a good thing. It means there's something bubbling under the surface that's about to change everything. And
Yep.
I'm going to share my screen real quick here in front of people listening. I'll kind of explain why I'm bringing it up, but it's that the classic Weimar Germany, marks in gold price. And I just pulled it up over here. Do you see my screen?
Yep.
So, I mean, when you look at the price of gold as it was taking over in Weimar Germany, which is like a classic hyperinflationary event, that line is not straight up.
Yeah.
It is wild. It's bouncing all over the place. It's going off the chart in both directions on its way, but it ends up way higher to where the paper currency is nothing. It's valueless, and the gold is infinite compared to it, because that's what happens when you have sound money versus a paper money.
Yep.
And we're seeing that right now too. It's just a little bit more gradual than that because we're living it. We're in the middle of it. It's hard to really see these long-term patterns happening when you're in it. But this is going to be just another chart someday that people are going to be looking back like, man, why weren't people just like going all in Bitcoin right now? It's obvious that paper that they're holding is going down, but this is why education is so big, and why we keep doing what we do. So, oh man, we got just under 10 minutes here. I got one other topic I would love to just bring to your attention. I try to usually keep this podcast pretty evergreen so I can share stuff forever in the future, but we'll put a little nugget in there for the people that are listening in present day, and just have some predictions here, because we are around 100K or something right now. It's been there for a little while, and just when we talk about this hyper Bitcoinization scenario that we talk about, where things are going to get nuts soon. Who knows what the soon definition is, if that's the next year, or the next 5 years, next 10 years. What do you foresee for the hyper Bitcoinization scenario as more corporations start buying this, more nation states start buying this, more individuals start buying this, and it just really goes off the rails? What do you see happening there? What kind of numbers are you visualizing?
Yeah, I mean, it's going to be really fascinating to see how this plays out. I go through periods where sometimes I'm like, wow, like how have I potentially figured this crazy thing out before the rest of the world? And then I also go through periods of like, wow, the rest of the world is really slow. Like this might take forever. Um, I, the way that I am thinking about this currently is, I think something like the power law or the Sailor 24 model are fairly reasonable, where we might see $1 million Bitcoin in 8 years or so. So maybe like a little less than 8 years. So maybe like 2032. That seems reasonable to me, and probably like a base case for my perspective. I definitely think it could accelerate significantly faster than that. And that's why I would never sell a majority of personal Bitcoin, or would never try to like necessarily time the market and get caught with losing a lot of Bitcoin. And something that could really accelerate it, obviously, is the Bitcoin Act from Senator Cynthia Lummis, where if the United States actually gets around to passing that and actively attempts to purchase 1 million Bitcoin at whatever price the price of Bitcoin is trading at, then I think this entire thing could enter a new wave of adoption that would be unlike anything that we've ever really seen before, and it could get absolutely insane. It's like humanity has discovered this new form of money. It's unprintable money. We've never found anything like that. All of these entities around the world have a money printer that is, and people all around the world use their money and they save their money, whether that's in actual money or whether that's in fixed income instruments, whether it's like debt, which is just IOUs for future units of their money. People haven't realized that once one of these large entities that has access to a money printer realizes they can literally print money and buy the only unprintable money that has ever existed, I think that it's probably eventually going to happen, and it's probably going to happen in like stealth mode. But once someone else figures out that someone is doing this and someone else has access to a money printer, things could really accelerate really fast. And it's hard to tell exactly when that could happen. It could be literally tomorrow. It could be decades from now. I'm not quite sure. But I'm happy. It's kind of like a analogy that people use is like musical chairs. It's like, if we're playing a game of musical chairs, you might as well just sit down as soon as possible. And once the world figures out that we're playing that game, then the last chair is probably going to get extremely valuable. And that's exactly what's happening with Bitcoin right now.
I love it. And I completely agree. I would be astounded if it took decades. Like that is like such a minuscule percentage chance for me. I think that at the absolute latest, it would be, years at this point. It's really crazy to think about. I will say though, like when El Salvador adopted it back, what was it, like 2021 or something?
Yeah.
I was really surprised that didn't kick off, this crazy musical chairs game among all these different nation states. It just goes to say that people are really slow, even whole countries who have the power to, like you said, print money that they can make for free and buy something that's unprintable and completely, just shift everything. And just to throw out a Brazilian sailor ism here is the all your models are broken as soon as that happens, because there's no models to predict what happens once that level of madness starts. And it's going to be good news for everyone who has Bitcoin, and like we talked about earlier, even people that don't have Bitcoin, you're going to come out on top of this. So hope that people are paying attention and reading the Bitcoin Standard and listening to Joe Burnett here, reading your work. Sir, where can people go find more of your good content? I know you have a YouTube channel. You have your Wealth is Melting, an article you mentioned a couple times. I'll make sure that's in the show notes. Where else can people find you?
Yeah, thanks, Ben. I enjoyed this. Yeah, you can find me on Twitter. I'm at III Capital or Joe Burnett. Watch out for the imposters. There's a lot of them. You can also find me on YouTube. Just type in Joe Burnett Bitcoin. It should pop up there. And then, yeah, if you want to learn more about Unchained, or you own a significant amount of Bitcoin that you want to make sure that you don't lose, or you're able to securely pass down for generations, definitely check out unchained.com, and we can help you with secure Bitcoin storage, anytime.
Amazing, man. This has been an excellent conversation, and I didn't touch any of my notes here, so that always means the same thing. It means I'm going to put you down for a future episode, a sequel in the future that I'm already looking forward to. So, yeah, man, it's going to be an exciting year, exciting rest of this decade. I really look forward to going through that adventure with you in my Twitter followers so I can know what's actually going on sometimes when I don't know. So it's been excellent, man. We'll be in touch. Thanks so much for coming.
Awesome. Thanks, Ben.